And now, Fairfax Breakfast Club with your host, Basil Lemba.
Welcome to the Fairfax Breakfast Club show. My name is Basil Lemba and I will be your host. The Fairfax Breakfast Club is a weekly program in which we bring you valuable and workable know-how you can use to improve your networking skills and grow your business. And today we find grow your family. I'll tell you more about it. We always start the show with a quote, and today's quote is in alignment with our networking principle number 4. Network is net plus work. Opportunity is missed by most people because it is dressed in overalls and looks like work. That's from Thomas Edison. With us today in the studio, we have a very special guest, someone who has been helping family deal with the challenges of going to college, or even more challenging, paying for it. Her name is Luanne Lee, and her business is Your College Planning Coach. Hello, Luanne.
Hi, Basil. Thanks for having me.
My pleasure. All right, let's get right to it.
Okay.
Tell them what it is. Tell them the real deal.
Well, you know, the real deal is it's very expensive out there. Mm-hmm. So the way we all hear about in the news, the tremendous amount of student loan debt that's out there, mm-hmm. How our children are graduating from college, but yet there's no job once they've graduated. The enormous amount of debt, it hit over $1 trillion in debt last year. Mm-hmm. That's higher than credit card debt in this country right now.
Oh, really? Student loan, eh?
Yes.
Wow.
And that's, when I say student loan debt, it's not just for the student, it's the parents as well. And
what do you mean by that?
Well, parents are taking on some of the
loan. Oh, I got you.
Yes. But you know what's scary is it's already gone now into the third generation. So there are grandparents that are paying on their own student loans because they went back to school when they got downsized or laid off.
Oh, okay.
They co-signed for their children, say our age, and then they're co-signing for their grandchildren because their children cannot qualify to co-sign for the loans for their children. So you've got someone who is getting ready to retire and they're collecting Social Security and they're having their Social Security checks debited for student loan payments.
For 3 generations.
For 3 generations. That's pretty scary. So what I do as a college planning coach is I try to reach the parents early enough and help educate and inform them on the choices that they have to reduce that out-of-pocket expense, to not fall into that burden of debt like what we have today. The reality is we're all going to have some debt. Mm-hmm. Even if we have been saving since our children were born, we can't possibly save enough anymore. The cost of education, according to the Department of Education and the College Board, has increased in the last 3 decades 300%. That's 100% every 10 years.
Why why does it increase that much? Do you know why?
A lot of it is because we parents are feeding into that system. And you know, and that's kind of a simple way of saying it, but the universities, they need to keep up with technology, so they've got to invest in all the newest and the greatest in order to keep up with what's going on in the world. And the salaries for the professors and the wonderful campuses that now it's kind of like, it's almost like you have to be a resort for some of these kids to say, yes, I want to go there. This looks good. They've got a hot tub on my floor or something like that. But the reality is the cost of education, I mean, it has increased so much. And we've gotten ourselves into the situation where we think the only course to go is for our children to go to college. And it's pretty much, an education is very worthwhile, but some kids, it's not the path that they should be going on. There's plenty of trades that are sorely needing people and that pay good money as well. But what I do is I try to educate them to, sure, let's go ahead and get an education for your children, but let's do it in the most efficient manner so that we're not overspending. Just like when the last time that you purchased a car, did you just go onto the car lot and you paid the sticker price that was on the lot? When you purchased your suit, did you look for sales? Do we clip coupons when we go to the grocery store? It's the same thing with an education. Education is a purchase, and it's one of the largest purchases besides our homes. Unless you've got 3 or 4 children, then it's probably going to be more than your home. So we have to manage our expectations, do our due diligence, and learn the loopholes that are out there that you can pay wholesale versus retail.
But let me ask you this. Okay, let's say you pay wholesale. Does that necessarily mean you come out on top, or you still, because when we're talking about 3 generation paying, I guess it's better to pay wholesale than retail.
Right.
At least.
And by saying that, I mean, be wise in your choices. You know, especially here in Virginia and many other states, the community college system is a very good system.
Yes, absolutely.
But it's gotten a stigma. You know, if you're going to community college, you're not getting as good of an education, or
even though you can transfer to GMU later to job.
Absolutely. So by sending your student to those first 2 years at community college saves a family on average of $30,000 to $50,000 in out-of-pocket expenses. And we also think that we have to go to the biggest and the best, and the more expensive a school is, the better of an education that we're going to get, and the better opportunities that we'll have in life to be successful and have well-paying jobs. But the reality is, if you start off at a $54,000 a year school, and I'm not going to name any names because I'm not picking on any in particular, and you can't afford it. It's such a stretch for that family financially that a year and a half later, well, geez, we cannot afford to continue going there, so we have to come back and take classes at the community college and then hopefully transfer to another school that costs less. What school name is going to be on that diploma? It's going to be the last one that you went to. And I just had a conference call the other day with a group of my peers around the country that are planners, and there was a study done that we think that going to Harvard is such the epitome of education, and that's going to set you for life as far as income. But Harvard graduates don't necessarily earn any more than somebody who graduated from George Mason.
Oh, really?
It's the person.
True, too.
It's the person. So, I try to, in the free workshops that I give, I will give talk about the myths and misconceptions about the whole education process, not education, but the financial planning process, the financial aid system, the FAFSA, which is the free application for federal student aid, everything that they need to be aware of, and how to get themselves prepared as far as their income and assets and their debt load, as well as getting their students prepared so that they're going to stand out on the college applications when the time comes. And that process doesn't start when they're in high school. That process should start when they're at least in middle school, if not younger. So
So how do you do that then? How do you do that? You start contacting them that soon yourself? How do you go about it, helping them?
Well, I do a lot of community work.
Free seminars and whatever?
Yep, I do. All of my workshops are free, and this past week I did several for some soccer groups. I was at an education fair in Manassas City last night. Girl Scout troops, Boy Scouts, church youth groups. Getting into the schools would be ideal to have the parents come in for those free workshops.
Think about a PTA. Do you get into the PTA, or do you have the opportunity to?
I've been introduced to several of the PTA leaders who are then working to get the venue at the school. So I've got several that are scheduled throughout the year, because sometimes it takes some time. So I've got several that are scheduled for in 2013. So it starts with that education, and then I have them come in for a free consultation. And so I give them a list of the financial vehicles or instruments that they should bring in, statements and such, as far as a snapshot of, okay, this is your financial situation right here. And I've got software that helps me to calculate as far as what the federal system would say, this is what you're going to be expected to pay, what your responsibility is, and is there anything that they can do to reduce that so that they'll increase their opportunities for financial aid. And that's working in the early years. All the way through, really, I can still help a family that has a senior at this time of the year. After January 1st, it's too late in that senior year to help that particular year. But they've got 4 or 5. I know I told you, and you were shocked, that there is, right now, how long do you think it takes the average student to graduate with a 4-year degree?
6 years?
Exactly. You're a cheater. But yeah, and that's 57% of students. That's pretty scary.
Now let me ask you this. This is not maybe a very good question. Do you think that the system pushed that, keep them in, that's what I heard at least, keep them in, they don't direct them, when the moment they come in, they sell them this, promote this, in the end, finally, then maybe 2-3 years down the line, say, oh, I'm supposed to do this. Do they take the exam? I guess that's where you come in. So you don't take all the classes, fumble around, and then finally decide what they're going to do. Well, they don't necessarily have the channel of, okay, I'm going to do this 1, 2, 3. Is that the reason why they wind up doing some of the classes?
Absolutely. The biggest problem is that students, you ask them, what school are you applying to? And they'll give you 5 or 6 of the biggest name brand schools that have the best football teams, or their girlfriend or boyfriend are going there or such. So what are you going to study? I haven't figured that out yet.
Oh, God.
Have you given any thought to what you want to do in life? So what I do with those students to try to stop that 6 or more years of graduating with that 4-year degree, or the constant transfers because they started out not knowing what they wanted to do and figured it out afterwards, and then all the credits that they've already taken are not going to transfer. So it's kind of a cycle. So I work with them backwards. Now, so we look at what career are you best suited for, and there's a couple of tests that I recommend that they take that helps do psychological profiling and really drills down to how they're wired and what's the best careers that they would be best suited for.
Gotcha.
Then we look at, okay, we've got the career, so let's look at the major, and then we look at the schools that are going to fit that. But then I go the step further and find those schools that are going to fit that family financially as well as academically for that student, to give them the best opportunity of getting through in 4 years to keep their costs down, but more importantly, making sure that that student has a job at the end of that that time in college.
How do you handle that? How do you ensure that?
Well, it's a lot of, in my business, I educate myself constantly. I'm certified as a late stage college planning specialist, and so I've got software programs that are tied into like the College Board and the financial aid and the school websites and whatnot, and bring everything all together. So there's formulas that work for the student as far as helping them to pick the right schools and the right majors. But there's also the formulas, the financial formulas that parents need to be aware of, so that they know that the school that they're applying to, that they're going to be able to afford. So I teach them, don't look at the sticker price, because the sticker price, just like buying a car, is not always the bottom line. And quite often, you're going to find that given their financial snapshot, there are certain assets that are sheltered from financial aid calculations, and there are certain assets that are going to get counted against you in the financial aid calculations. So what do you think is better? You know, you want to be able to shelter, and these are all legal opportunities, just like when we go to a CPA or an accountant, they help us what? Pay less in taxes. So I help families figure out how to pay less out of pocket in college so that they'll have more monies sitting in their retirement accounts. Because college is a retirement problem. It's not just a 4-year problem, because the cost of an education these days is right around, you know, anywhere from $80,000 to $250,000 plus per student, which is pretty scary.
Sure.
So a little bit of planning needs to be put into place for that.
So I can see that. I have a question for you. Have you ever considered your job as similar to the mortgage officer? Have you ever thought about it that way?
Well,
I think
very similar, and that's how I got started with this. I've been in financial services since 1999.
Okay.
And my goal was to help families prepare for the future, to be able to save for college or retirement or, you know, whatever was going to be comfortable for them. And at one point I was offering mortgage services, just looking at that complete financial picture. And that's when I started to see the credit card or the credit reports and all of that student loan debt for the parents as well as the students. And I had heard for quite a while about the specialty of college planning. And quite honestly, I thought it was just, you know, telling somebody to save in a 529 plan, which I'm not a big proponent of, because it counts against them in financial aid, as well as maybe that bit of a tax break might cost you thousands of dollars in financial aid. So that's my my path to where I am today was from, you know, as a mortgage consultant, seeing all of that debt.
Oh, okay.
And so it's it all ties in together, and quite often when we are looking at the family's financial picture, they have to become cash flow efficient during this time. And quite often we're doing things that we think are the right thing for us financially, but we're not being the most efficient when we're looking at possibly taking on an enormous amount of cost for paying for college. So sometimes if they're trying to pay off a mortgage very quickly, because a lot of people, their plan was to, I'm going to pay off my mortgage as fast as I can so then I can use an equity line to pay for college. Well, what happened in the last few years with the real estate market in all over the country, a lot of people lost the value of their the monies that they had in their homes. So all that extra money that they were putting into to pay their mortgage off, now that suddenly has what? It's gone. So sometimes it's looking at those things and just looking at how to become the most cash flow efficient during this time to be able to manage that cost. Because the typical family, they will save money, and even though they could use that money for paying off credit card debt or whatever, nope, we saved that for college. Our kids are not going to have student loans, and so we're just going to spend it. But what's happened, they were saving it oftentimes in volatile markets with investing rather than saving. So they had less money than what they started with. The cost of an education has increased tremendously. So the next thing is what? They have to borrow. And so we go to the bank, we look for borrowing sources. We haven't thought about how are we going to fit this into our budget. And we squeeze that budget until it's ready to break. And then they think, well, we'll look at financial aid now and look at it as a last resort.
So they should look at it first.
Well, the smart approach is pretty simple as just the ABCs, where they the whole goal is to not deplete all of their assets, but to keep those assets and don't touch them until the last thing. So the first thing that they need to do is apply for financial aid.
Okay.
And even if they have an income like Bill Gates, they need to apply for financial aid, because they might not get any financial need if they're of what I call the financially blessed, but if their student can get merit scholarships, which has nothing to do with a parent's income and assets, if any of that money has come from the federal or state government, if they haven't completed that financial aid application, they won't receive any of that money. So that's lost money just sitting there at the table. And then, so that's A, apply for financial aid.
Okay.
So B, become cash flow efficient, like we said. Look at where their wealth is leaking out from them and tighten things up. Then C is looking at credit as far as borrowing sources that can be strategically done, to leave D, the depleting of the assets, that they may not have to. And it's all about college and retirement. You can do both with some planning in all these areas.
Sure. How many people do what you do?
Not nearly enough. There are, I know in the organization that I'm a part of, and it's called College Planning Relief, and I'm licensed and certified through them, and I'm actually on their executive board of directors. I think we've got about 250 certified planners around the country, and there are other organizations out there, but not nearly enough when you look at how many.
I mean, it's 100 million families, 250. That does not do it. That does not do it.
So, and we're very different. Somebody will say, well, geez, my CPA is going to help me with the filing of the forms, or my financial planner has told me to just save in a 529 plan or such. They do not know all the ins and outs of what it takes to make sure that you can shelter certain assets, which ones are going to count against them, how to reduce that their expected family contribution to increase their financial aid. I mean, I've saved some families upwards of $20,000 per year in out-of-pocket expenses. That's money that they can have for their future or for the next
4
child.
years, that's what, $80,000?
Well, that's another misconception, because the cost of an education increases every single year. So
9 years, $100,000 then?
Absolutely, but most parents are looking at just that first year.
Gotcha.
And so 4 times 20, 80,000, yeah, we can squeak that out. They don't look at everything else that's part of it, and that the average increase for a state school is about 6%. For a private school, it's about 4%. But last year, the national average was 8%.
Okay.
So it can be a lot.
Gotcha. We have 1 minute left.
Okay.
I want you to please tell, we have the privilege to have you at breakfast event. and an expo, I want you to say a word regarding our breakfast event and your thought on it.
I think your breakfast event, you've kept in contact with me for years, and I was finally able to come, and I think it's wonderful. Okay. The speed networking, I've met other professionals that I can come in and offer to do my services for their clients.
Okay, very good.
And it helps them with, their clients just love them for that, and helps them increase their business. Okay. I think the Breakfast Club is wonderful, and I'm coming exhibiting at your December event because I visited your